So class, you are welcome to our FR class today. How was our day? We had a stress-free day. So I think this is the first time we are meeting online. So it's going to be a bit different to our normal WhatsApp lecture that we normally do. So basically tonight we are just going to introduce ourselves to the FR syllabus. Then after that, or before even introducing ourselves to the FR syllabus, we're going to talk about the last diets and the process around it and some necessary tips than that we can actually adopt, which is going to help us with this coming diet. And by the grace of Almighty, we shall all escape through both FR and all other courses we are writing this diet, inshallah. So I think some people are still joining. So let's just wait for like 5 minutes more. So after that, we are going to start. Mr. Oyewole, do you want to say something? Mr. Oyewole Olaleye.
Sorry, Mr. Sulaiman. Please, you can continue your class. You can't move on. The class is filled up already. This is 100
All right,
already. So I'm sending the streaming link to the class. The others will join on YouTube. So you can start the class, sir.
all right, all right. Thank you very much. So, good evening once again. So, my name is Sulaiman Nosura Gbolan. So, with my senior colleagues, we will be taking us through the FR financial reporting class, this diet. And sorry, please, 1 minute. So, sorry. So, first of all, I would like to congratulate every one of us, those people coming from foundation or people just starting the skills level, or even some of us that we had to just retake 1 or 2 courses. So also I would like to implore us that in a professional exam like this, we need to understand that for every time we had a reference that we need to write our paper, we should not allow us to bring us to our down moment or to make us feel discouraged. So it's normal thing. This is just, this is a professional exam and it's different from our normal school exam that we are doing. So in a professional exam, we should all expect the unexpected and anything can happen. So all we need to do is just to put in all our necessary effort, do the reading, going extra miles to get some necessary materials. And at the end, we should also add prayer to everything we are doing because I can exam sometimes even the best students fail. So I just want to encourage every one of us that it's normal thing, especially for those of us that had reference and maybe we are feeling discouraged already. No, we don't need to do that. Having reference in an exam like this is just an opportunity for us to know more about that particular course. Like me myself, it take me like 4 diets before I can complete my exam. Upon the fact that I also start from skills and just skills and professional. So each stages take me to diet. So no one is hierarchy of knowledge, like no one is the most high. For every time you have 1 or 2 people to retake, to just take that moment as a motivation to ourselves, like okay, no problem, I'm going to retake this and I'm getting it right this time around. Also, we should also learn from our previous diets. For those of us that has asked that write the last diet exam, should also learn from me. Should, try to sit ourselves down and look at, okay, where does it go wrong? What did I do that I'm not supposed to do? Is it about the timing? Is it about my preparation? To just first of all assess ourselves, and after that, then we know where to improve, how to do things more better. But at the end of the day, I believe, inshallah, we are going to escape through this diet by the special grace of God. So, without wasting much of our time tonight, we are going to review the syllabus, and if time permits us, after that, I'm going to talk about the framework and the regulatory framework and the conceptual framework as well. So, can you confirm if you can see my screen, please?
We can't see your screen.
You can't see it.
I can't see your screen.
I can't see your screen.
Not yet.
Turn to
Okay. Mr. Taufik.
Yes, I can't see your screen too. You are going to stop sharing, then you share again.
No. The thing is that I'm saying that I'm not allowed to share my screen.
Really? Okay, let me check here.
Okay.
Let me check. I think it was because of the students like sharing their videos and the likes. That's why I disabled it.
Okay. Because I can see that Mr.
You can share it.
I think he's trying to share his own screen too.
That's the reason why I disabled it. But don't worry, you can share your screen now. Please, everybody,
Right.
please don't let us share our screen.
Please, I can see.
The screen is coming up. Please don't worry. The screen is coming up. And please, let's mute ourselves. Anytime we have question, we have limited time. We need to achieve our objective tonight. So let's just remain muted. If you have any question, the lecturer is going to call on. So, Mr. Sulaiman, you can share your screen now.
Yes, I'm trying to
stop.
share that.
You can stop this, reshare it again.
Yeah.
Okay, sorry, sir, Mr. Yusuf. Good evening.
Good evening, ma'am.
Yes, please, we have a lot of people that distract us with their background. Please, once they make any noise, Packham, remove them. Please.
Yes, no, that's it.
Yes, we are already stressed out, so we are trying to concentrate for this class, please.
Okay.
No problem.
Thank you, sir.
All right, no problem. Mr. Taufik, please kindly take note of that.
Yes, I'm here already. I'm here. So in case anybody just distract us, we are going to be forced to remove that person from the call. So that's it. That's it.
Can you see my screen now?
Sir, we are seeing.
No, sir. No,
Mr. Taufik, can you confirm if you can see my screen?
Yes, we can see your screen now. You can move on now.
Yes, we can see.
All right. So, just like I've said before, that tonight we'll be looking at the syllabus together. So, it's going to be an interactive class. Although I may not be able to, start calling you one after the other, but in case you have anything you want me to clarify, so you can just raise up your hand. Mr. Taufik. I think my voice is repeating itself somehow.
Yes. Once one person unmutes his or herself, your voice will be echoing. So I've removed that person. I will be removing them now. So you can continue your class. Yes.
Okay, so in case you have any question or you want me to clarify something or you need anything, just can just use the emoji to signify, and we are going to call upon you and we are going to have the conversation together. So throughout this diet, I will be in charge of FR with my colleagues. I think Sister Jamila So she will also be coming online soon. It will not be today, maybe our next class. So you also meet her as well. And some of our senior colleagues that will be taking you through some of the key aspects of the syllabus. But tonight, let's start together. So just like you can see, is ICANN normally they have like a structural process put in place just to allow students to have a clear view of what they want to do by assigning some percentage to some aspects of the syllabus so that you can know that, okay, from these aspects I'm reading currently cover this particular percentage. These are the aspects of the syllabus that has the highest percentage. So those aspects of the syllabus that have the most percentage, you know that you need to, spend more time on them, try to understand and re-understand them, solve more questions, and get the necessary material, which is going to allow you to have a very smooth examination. Now, we have the conceptual and regulatory framework for financial reporting. This covers 10%. So under these aspects, we'll be discussing some the major regulatory framework, which are the principles, the laws that guide the financial reporting itself, and also the conceptual framework, which are the key concepts, the key and major concepts that we're trying to understand their meaning. What are they talking about? So these are the things we are going to be discussing under this first aspect of the syllabus. After that, we'll be looking at accounting standard and policy related to specific transaction in the financial statement. So just like we have a numerous number of accounting standards. However, there are some part of these accounting standard that speak to a specific type of transaction. We see that very soon now. And the C part, preparation and presentation of single entity published account. This is just our normal published account we have been doing over time. Like I said before, for some people that have write this FR before, saying all this might actually be sounding or look somehow to you. But please, I don't want us to feel discouraged. I don't want us to feel like I've done all this before. What am I doing here again? No, you don't need that. So just like I've said before, for every time one have reference in any of the courses you are taking, just take it as an opportunity for you to know more about that particular about that particular subject. Don't see it as I'm not good enough. No, it's not like that. It's just an opportunity for you to know more and more about you, to be very, very good at that particular subject. So it's not like you are not competent or you are not good enough. You are very competent and you are good enough to go. Sometimes a single mark, even half mark, make a lot of difference sometimes. Yes, it make a lot of difference. So I don't want us to feel discouraged at all. It's just normal process about life. This is a professional exam. No, I've said this before, but I just feel like I should repeat it again because the same feeling I'm going to have if I'm doing that kind of person, the same thing I'm trying to imagine that people will be going through right now. So, but it's normal thing. So don't feel discouraged. Just take it as an avenue for you to learn more. So the deep part of it is preparation and presentation of simple group account. We'll be introduced to a simple group account, which is going to comprise of a parent and its subsidiary, a parent company and its subsidiary. And after that, we'll be looking at analysis and interpretation of financial statement. Basically, this talk about the ratio analysis aspect and interpretation of those ratios, getting to know their meaning, what it look like, how to interpret what we compute, how to know the meaning of some key figures we work out, how to make use of them to make an informed decision in an organization. And after that, we'll be looking at sustainability reporting framework, which is also a 10% part of the syllabus. And lastly, we'll be looking at ethics, current and technological development in financial reporting, which is also a 10% aspect of the syllabus. So let's start from the first one, which is conceptual and legal framework for financial reporting. Under this, just like I've said before, we discuss the regulatory framework in financial reporting, which are the rules, the guideline, the principle that the association or the body that oversee the financial reporting framework, some of these guidelines that they set out, like, okay, for you to have an accurate and absolute financial reporting, these are the guidelines, these are the process you must pass, you must pass through. Not like if I'm preparing my own financial reporting, I will prepare it based on my own personal rule. If another person prepare his own reporting, is going to prepare it based on his own personal rules and regulation. No. So this body oversee everything that has to do with financial reporting. They set out the standard, they set out the rules and regulations that must be followed. So we are going to discuss about this regulatory framework if time permits today. And if not, I'm going to send the notes to the class so that it's something we can actually read through by ourselves. After that, we are going to look into conceptual framework. So conceptual framework talk about some key meanings in financial reporting, some key terms that we need to understand, which will serve as our foundation that we can now build upon. So there are some key and elementary terms. Some of these key terms, like the likes of knowing the meaning of going concern. You know, when a financial statement is being prepared using the going concern basis. Also, we are going to talk about some of the accounting bases. We have the likes of cash basis, we have the accrual basis as well. All this will be discussed under the conceptual framework. So under that, we'll be looking at the main.
Sorry. Who is sharing the screen that took over the screen now? Who is this?
As someone took over this, I don't even know.
Yeah, someone has taken over your screen. Okay, now we are seeing your screen now. I'm trying to, yes. I don't know. Oh my God. Okay, you can continue, sir. You can continue.
Please, I can't see the screen, please.
It's coming up. Don't worry.
I can't see the screen. Please.
Can you see it now?
Yes, you can go on, sir. You can go on.
Okay, so under the conceptual framework, we'll be looking at the objective, the qualitative characteristics, the limitation of financial statement. So what we'll be looking at under this. Are you saying something?
It's your network. It will
so
come.
You cannot see this. You can just refresh your network.
No, don't worry. Don't refresh. It will come back, or else you'll be out of the call. Another person will join you. You just remain there. It will come. You can continue, Mr. Sulaiman, sir. Continue, sir.
Okay. All right. So under this, we are going to look at the objective, the qualitative characteristics, and limitation of financial statements. So basically, what we'll be talking about here is that for every action that we want to do, we must have objective, the reason. What do you want to achieve for doing this? The same thing is applicable under financial reporting. For that particular report you are trying to prepare, there must be some specific objective that make us want to do it, and there must be some characteristics that we can see that will make us, have that assurance in it that, okay, this is what we can call a good financial reporting. These are the key qualities. These are the key elements that must be present. So we talk about the likes of accuracy, completeness, timeliness, and not being too ambiguous for us to understand. So these are some of the key characteristics that we'll be looking at. And we are going to look about the limitation. There is nothing in this slide that has advantage without some little disadvantage. So after that, we'll be looking at the underlying assumption in preparing financial statements and how they are applied to financial reporting. What are the key assumptions? What are the key what are the key assumptions, the key guidelines, the some of the key elements we are going to see or that we need before we can prepare a financial statement. Also, we are going to look at the users of financial statements and their information needs. One of the major things you are going to look at under this is who are the major stakeholders when it comes to a company financial statement. Who are the major stakeholders when it comes to, okay, this is the financial statement of the company. What I mean by stakeholder, I'm looking at the likes of the shareholders, which are the owner of the company. I'm talking about the financial services, the financial houses, like the banks, that they'll be the one providing the company with some kind of debt instrument to finance the company. I'm looking at the employee of the company, etc. So what we'll be looking out here, who are the people that rely on a particular company financial information before they can make their own decision, and what do they need before they can make sure before they can actually make that particular decision. One of these stakeholders is also the investors. Investors are the people that, you know, they are ready to put in their own investment, their own money into a particular company's operation. So if you are an investor of a particular company, you will also need some key elements of that company, some key information before you can decide, okay, I'm going to invest, or no, I'm not going to invest. And what are the likes of these key elements that you need? You are going to need a financial statement of this particular company, which is going to talk about how the company have been performing over time. What are they? What is their operation look like in terms of, are they profit-oriented organization? Are they making profit, or they are not making profit? Even if they are not making profit presently, is there a chance of them making it in future terms? You know, sometimes they're kind of project that company will bank on, and at the start it won't need any profit, but as time goes on, it's going to be a big cash flow for them, like a big cash cow for them. So some of these key informations, we are going to look at this information and the users of the particular information. Also, we are going to identify and discuss the elements of financial statement. You know, when I say financial statement, I think there are 5 key elements of financial statement. We have the statement of financial position. We have the statement of cash flow. We have the statement of profit or loss. We have statement of changes in equity. So all these are parts of the elements that, you know, come together to form what we call a financial statement. Financial statement is not just a single statement. It's comprised of different statements that look at the performance of a company from different angles. The profit or loss account will be telling us what the company have been able to generate for a particular period of time under review, in terms of what is their revenue, what is their cost of sales, what are their operating expenses, what are their administrative expenses, their finance costs, their depreciation, their amortization. You know, at the end of the day, we'll be able to see a clear bottom line of, okay, is it a profit period for them? So this particular profit or loss account is going to tell us the operation, what the company was able to achieve in terms of their revenue against all forms of expenses that is being incurred for that particular period of time. We also have the statement of financial position, which is going to tell us some of the key assets of the company in terms of their non-current assets, the current assets, non-current liability, current liability, the equity. So basically, this will tell us about what are the foundation, what are the key belongings, what are the key assets, what are the major things that can show that, okay, this particular company, it's worthwhile of investing. Also, we have the cash flow. We will talk about the changes in cash between one period to another. The changes, what happened? We have these figures here. We have this figure over time. What happened in between that? That incident that's happened. What is the effect on cash So these are the different elements of financial statement that are looking to a company affairs from different angles. So we are going to talk about recognition measure of elements of financial statement. We also be looking at the concept of capital maintenance. What do we mean by capital maintenance? Also, we'll be looking at the difference between principle-based and rule-based financial framework. What are they talking about? What is the meaning of principle-based? What is the meaning of rule-based financial framework? Also, we'll be discussing about the accrual and cash basis accounting. So these are part of the key concepts that we'll be looking at. I think I have the notes. Yes, should have this. If you are unable to discuss it on the call today, I will definitely share the notes with us in our respective groups. So after that, we'll be looking at financial statements in relation to reporting entity under the conceptual framework. We also be looking at the standard setting process of International Accounting Standard Board, so International Accounting Standard Board, these are the board that oversee, these are the body that formulate the principle, the guidelines, the rules and regulations that must be followed. So we are going to look at the setting process, the relationship, and the national standard setters. Also, we'll be discussing the due process for revision of standard. Just like we have it recently, there is a new standard coming up, IFRS 18, which is going to replace IS1. Talking about the presentation of financial statements, we now have new formats that companies should adopt in terms of the way they present their statement of profit or loss. There are now some new inclusions, some new breakdown that must be present. So we are going to look at the process of adoption of IFRS and the application of local standard. Also, we are going to explain the peculiar nature, the relevant framework of specialized non-profit and public sector entity. So basically what we'll be looking at here, we have different sectors of the economy. We have the oil and gas sector, we have the financial services sector. So each sector have different application, have different mode of applying or making use of the accounting standard. The way we are going to treat a particular transaction in a particular sector will be differ from the way we are going to treat it in another sector. Also, we are going to look at the roles of International Sustainability Reporting Board. I think I will be a little bit fast. It's almost 9:30. So these are the legal framework aspects. These are the legal framework. So these talk about basically the rules, identify and discuss laws and regulations that govern the preparation of financial statements. Also identify the relevant provision of. Mr. Taufik, are you saying something? Okay. So identify and discuss the relevant provision of companies and allied matters amended in the Financial Reporting Council of Nigeria. So, before any basic accounting standard can be formulated or adjusted, or some changes can occur, there are some key professional body that will be consulted. There are some key professional body that also that we have a representative in this particular body that oversee the accounting standard. So some of these bodies are what we have there. You have the Central Bank, you have the NDIC, the FRC, the NICOM, the NGX, the SEC, Securities and Exchange Commission. We also have the Pension Commission. All these bodies, they will have a representative in place in the major body that oversee the financial reporting framework. So the section B of the syllabus, which covers 15%. Here we have the IFRS accounting standard and policy related to a specific transaction in financial statements. So number one, there we have the tangible non-current asset. So here, I was explaining some of the key elements of financial statement, and I made mention of statement of financial position. So statement of financial position, I said it's going to show us the asset, liability, and equity of the company. So here, we'll be looking at some key accounting standards that speak to a specific transaction. So example of specific transaction here, we have the tangible non-current assets. So there are some key standards that speak to the application, the recognition criteria, the accounting treatment, the fair value measurement of this particular aspect. So some of these key standards, we have the IS 16 property plant. IS 16 talk about property, plant, and equipment. We have IS 20, which talk about the government grants. So any assets that we acquire in form of government grant, we are going to make use of the pronouncement we have under IS 620 to treat it. We also have IS 23, which is the borrowing cost. So for any asset that we acquire through borrowing, we are going to make use of IS 23 to know what is going to be our capitalization value. At what point do we start capitalizing? At what point do we stop capitalizing? What is the value we can recognize? So we are going to make use of IS 23 in dealing with that aspect. Also, we have IS 40. IS 40 talk about investment property. So investment property, I don't want to be explaining the accounting standard now, we're still going to look at it, but let me just brush us through. So investment property talk about the non-current asset that we acquire in form of investment, that generates inflow for us. So let me set an example for us. What we have under IS 40 is what can I use as an example? Okay, a property that is being owned by a particular individual or a company. However, this particular property that is being owned by this individual is not being used by the individual for administrative purpose. What I mean by administrative purpose is that maybe to be for a company now, they have their generator that they use, as part of what they use for their operation, for their day-to-day operation, putting it on day-to-day to power their company. So that particular type of usage is what I mean by being used for administrative purpose. But when we are talking about IS 40, these particular assets are the type of asset that is being used by organization to generate rental income. They make use of it to generate income rather than making use of it for administrative purpose. Maybe you have a generator that you rent out to people and you generate inflow from it. That particular generator is also your asset. But if you want to deal with it, you are not going to use IS 60, which talk about assets that you use for administrative purpose. You are not going to use IS 20, but rather you are going to make use of IS 40, investment property. We also have IFRS 5, which talk about non-current asset held for sales and discontinued operation. IFRS 5 talk about asset held for sales, non-current assets held for sales, and discontinued operation. So what do we mean by non-current asset held for sales? So these are the, some of our assets that we are not using them for any administrative purpose. We are not using them for rental income, but rather we want to dispose them. So for any asset the organization intends to dispose, there are some special treatments that must be applicable to this particular asset. There are some key elements that must be present. There are some key recognition criteria that must be met before an organization can call a particular asset non-current asset held for sales. So we are going to use this particular IFRS 5 to look into some regulatory framework, some requirements, some of the process that must be put in place when organizations have particular asset that they want to dispose, rather than using it for their operation. Also, we have our IFRS 16, which talk about those assets we acquire through lease agreement. So we are going to look at it. Sorry, class. Hope I'm not being too fast.
You are fast, sir.
Yeah.
I'm very
You're
sorry.
still doing fast. You are fast.
I'm very
You
sorry.
can't screen it.
Fast. Just as soon as a brush up. Okay. Because yes. Thank you for that. So you can just assume it's a brush up because we are still going to
screen again.
What do you say? So we are still going to look at this. We are still going to look at this segment one by each, one after the other. So when we are looking at it, we are going to spend more time looking at it together. So I'm just taking us through the general body of what we want to look at for this diet. So I'm very sorry if I'm fast. I'm trying to, I'm looking at the time, and as well, I want us to finish this breakdown today. So
because of time, and you just summarizing. So
okay, so when next we meet, we are going to start our class in full. So we will also be looking at intangible non-current asset, which is IS 38. So what do we mean by intangible non-current assets? These are the assets of a particular company that they are not feasible. We may not be able to see them with our physical eyes. Again, we may not be able to see them just like we see our motor vehicle, our cars, our machines. But however, they are also an asset of the company. They are also part of the value of that company. The example of these are, you have the likes of software. Software that is being used in an organization is not something we can see with our physical eyes. Also, we have goodwill. We have goodwill. So we have two types of goodwill. There is an inherent goodwill, like internal generated goodwill, and there's a purchase goodwill. So we are going to look at it. We also have patent rights, copyright. These are the rights that an organization purchases to have privileges to some certain aspect of their operations. All these, they are also an asset of organization, but we will be using IS 38 to look at some necessary principles, some necessary guidelines, some of the key criteria that must be present in all these aspects of the asset before we can call it an asset, and how we are going to treat them. So don't forget, we are still under policy relating to a specific financial statement, specific transaction in financial statement. So we also have impairment, IS 36. So this is the decrease in value of a part of an asset. So we'll be looking at this IS 36 impairment. We're looking at impairment as a particular standard that speaks to how we should treat or how we should recognize the changes in value of our assets over time. Also, we'll be looking at financial instruments. So financial instruments is one of the key accounting standards that, in fact, to me, it's one of, for me, it's one of the how should I put it? I don't want to say top accounting standard for me. So some people will find it very easy, but for me, it look too ambiguous for me sometimes. But we are still going to look at it, and for this stage, we are just going to look at the interface, like the topmost part of it, not deep down in it yet. So just like you know that when we are discussing a particular accounting standard, we need to make reference to some other standard too. So that is why when we want to read or want to prepare for exam, it's not advisable for us to just decide that I'm going to read only IS 16, IS 5, IS 2, IFRS 15 alone. Because you may see a single question, especially in group account, whereby each additional information can speak to different accounting standards. So we need to just be able to at least have some basic understanding of each of these standards. Not like we should have a full understanding of it at the beginning like this, but as time goes on, by the time we keep familiarizing ourselves with it, believe me, you will all enjoy the class. That these things are very simple, even more than more than what we think about them. Also, we have inventory and revenue from contract with customer. Inventory is IS2, while revenue from contract with customer is IFRS 15. So what do you mean by inventory? Inventory, these are what the organization transacts in their day-to-day activities. So for Dangote Sugar Company, so their own inventory is their sugar, what they transact on day-to-day activities. For oil and gas, so their inventory will definitely be the diesel, the gas, the petrol, and the lights. So there's a particular standard that talk about how should we treat our inventory, which is IS2. How should we treat it? How should we measure the price? How should we, recognize it in our book? What value should we recognize? What value should we not recognize? How should we test the changes in this value from one period to another? Everything under this we'll be looking at under IS2. We also have IFRS 15. IFRS 15 talk about revenue from contract with customer. At what point should we recognize revenue? At what point? Because basically most times there are some aspects of our operation that they are not revenue yet, but we recognize them as revenue. Some are still a contract liability because we have not performed the expected performance obligation. But for the fact that we don't make use of this, we recognize revenue at early stage, and which may not even be revenue at the end. So IFRS 15 is what speaks to that, is what is going to guide us. There are basic 5 guidelines under this IFRS that we must be followed before a particular organization can recognize revenue. So we are going to look at that. Also, we have provision, contingent liability, contingent assets, and also events after reporting date. So events after reporting date is IS 10, provision, contingent assets, contingent liability is IS 7. Sorry, is IS 37. So IS 37 give us a clear understanding about where should we make provision. At what point can we recognize provision? In fact, what is the meaning of provision self? So provision is just like a plan that we have ahead. A plan that we have ahead in respect to our financial obligation that we need to meet. So we can now make provision for it ahead of that time. We can. I'm looking at the perfect word to use. Sorry, please. Sorry. So it's like a particular amount that we set aside. You get, we set it aside that okay, in these social times to come, we are going to need this particular amount. Now, when that particular time now comes now, it will not be, is it like it's exact what we set aside, or is more than what we set aside, or it might even be lesser than what we set aside. As at the time we are setting it aside, we don't know what is going to be. It's about the future. It's about us preparing ahead for the future. There's a particular obligation we are going to, we need to set in the future. Now we now make and how should I put it? We are just planning ahead of that time. Tomorrow, I'm going to pay someone 100,000. Now, today, I know that I will pay someone tomorrow, but I don't know the amount yet. Now, today, I'm looking at, okay, what can I do? Because tomorrow, I'm going to settle Mr. Let me look at one of our names. Okay, I'm going to settle Mr. Ozeni tomorrow. I want to settle him maybe with 100,000. But I don't know his 100,000 yet. But as of today, when I'm preparing my financial statement, I need to show it there that tomorrow I'm owing Mr. Ozeni 100,000. I'm owing Mr. Ozeni generally, but I don't know. Maybe what I'm going to settle him is going to be this or that. In order for me not to just start looking for that, this or that, as of today, I can now make provision for that event that is going to happen tomorrow, depending on some certain criteria that must be met. Because it's not that I will just decide I want to make provision. No, before I can make provision, there are some certain criteria that must be met. Contractual obligation. Thank you. So there are some yes, thank you very much. There are some certain criteria that must be met before I will now decide that, okay, I want to make provision. It's not something that I will just decide in my own house and, okay, let me just make provision. It's not like that. So also contingent assets and contingent liability. So contingent assets, these are the assets that may likely come to place, may likely be possible upon meeting of some certain criteria. So there are some certain criteria that must be met before that asset can come into existence. The same thing contingent liability. There are some certain or no criteria that must be met before that liability will become a liability too. All these we'll be looking at under IS 37. IS 10 talk about event after reporting date. What do you mean by event after reporting? These are the activities that occur after we have prepared our report and we have done with everything we need to do. So there are two categories of these. We have adjusting event and we have non-adjusting event. So adjusting event, these are the events that even for the fact that they occur after we have done with our reporting, we can still go in and make an adjustment. Like we are going to make an adjustment for this kind of event, like these events have actually occurred before we prepare the report. So event after reporting, they talk about two major things. We have adjusting and non-adjusting. Adjusting are the event that, as at the time when we are preparing our financial statement, I'm preparing my financial statement now. As at now that I'm preparing it, that event now later occur in 2 months' time. But as at now that I'm preparing it, there are some key indications that, oh, in 2 months' time, oh, there is likely that this thing will happen. But as at now that I'm preparing it, I don't know, maybe it's going to happen. It's either yes or no. Let me give us an example. A company that have a litigation or a court case. Yes, a company that have a court case. Maybe they are closing their financial end today, but there is still a court case ongoing with one of their customers who sued them due to their negligence. You know, we are preparing our financial reporting now. The court have not provided the final judgment, but there is a case already. Now, in 2 months' time, the court now later say, okay, oh, the company, oh, you are at fault, oh, because of that, you need to pay this your customer 2 million naira. We are going to adjust our book to show that 2 million naira as a liability. So that is an example of adjusting events. Why not adjusting events? These are the events that there is no indication of their occurrence, don't even have the knowledge about them, and also their occurrence is not going to affect the financial statements. So when we get to that place, we are going to look at it better. IS10 talk about the events after the reporting date. So we have IS12, we talk about the income tax. We have IS33, any per share. Be looking at that as well. We have effect of changes in foreign exchange, IS21. Yeah, we are going to look about what are the effects of this going and coming down of dollars. I'm just using dollars as an example of foreign currency, of foreign transactions, majorly for companies that deal with foreign transactions, you know, that they need to convert the home-based currency to foreign currency to home-based currency. So we are going to look at how should we treat them? What are the necessary measures that must be put in place? How should we do the accounting, the posting, the accounting entries, and the likes? So basically, everything I've been talking about since cover 15% of the syllabus. Now, this C part cover a very substantial percentage, a very relevant percentage that you can't avoid to miss it. In fact, you dare not to miss it. Publish account 20%. So these are the angles where most times we have our question ones, the compulsory question. I'm not saying that it's 100% from this aspect, but most times these are the likely areas that even if we don't have our number one question from it, we have our section B questions, which are the 20 marks question from it. So this we'll be looking at. I'm not sure if I'm the one that will take us this, but no problem. Even if I'm the one or I'm not the one thing I can assure you that whosoever is taking you this is going to be the best of the best. So here we'll be looking at preparation and presentation of single entity published account. What do you mean by published account? The published account, these are the accounts that are part of the elements of the financial statement. Published account is going to comprise of the P or L account, profit or loss account. It's going to comprise of changes in equity. It's going to comprise of the statement of financial position. So all this, we are going to take you through how to do the preparation, how to apply some of the standards that we have been talking about since. What is their effect when we're preparing the financial statement? And I see a revenue, and there's a clear note that, okay, this is a performance obligation, but as at this time, this certain percentage of the revenue, the company is here to perform the performance obligation. So from there, you will now make reference to IFRS 15. At what point should I post a particular figure as revenue? So everything that speaks to this, we'll be looking at. Also, we are going to, explain changes introduced by IFRS 18, which is the new accounting standard that is going to replace IAS 1. So another key aspect or key section of the syllabus that we should not miss is preparing and presentation of financial statement of simple group, a subsidiary, and an associate. That also covers 20%. So what do we mean by group account? What is the meaning of group account? So group account talk about an entity, which is the parent company, and its subsidiaries or its associate. What is the meaning of subsidiary? What is the meaning of the parent company? What is the meaning of associate? All these we'll be looking into when we are talking about this particular session. But let me just take us through some simple aspects of it. So don't mind the way I'm explaining. Everything I'm explaining is not hard. It's not complex. They are very, very simple. They are very, very simple. All we need to do is to just take our time, create time for reading, and we should just try to understand to the best of our knowledge. And also, we need to avoid information overload. What do I mean by information overload? Information overload is a situation whereby you are attending this tutorial. Yes, you look into the material. You are attending this again. You look into the material. You are attending that. You are attending this. You are attending this. At the end of the day, you now have more information that you are still looking at IS2 in different material. When you pick IS2, what do you understand? Okay, this is what they are saying here. Okay, no problem. Just find time, just find means to consolidate your understanding about it. Then you move to another standard. So we need to avoid information overload as well. Just as we can't deal with insufficient information, you just find means to be in between being sufficient and overload, which is the optimum point. So the section D will be looking at preparation of group accounts. So a group account, under group account, will be having the parent company which own more than 50%. Before you can become a parent company of a particular group, you must own more than 50% of that group that you want to become a parent for. You must own more than 50%. So 51% upward, you become a parent. Below 51%, below 50% like that, you are under associate. Once you are moving below, I think it's 20%, then you become a subsidiary. You become a subsidiary. I think I received a message. Okay, sorry, Mr. Samuel Owolabi. Can you hear me, sir?
Okay. Mr. Suleiman,
Yes,
the time is, yes, we should watch the time on. Okay.
Okay. Okay, I think somehow is open. Let me just. So, section D, we talk about the group accounts. And as you can see, I was saying that there are a lot of standards that work interrelated. So, under the group accounts, these are the sub accounting standard that speak to different aspects of the group account. You have IS 27, 28, IFRS 3, and IFRS 10. Okay. All these are still other group accounts. So we have the section which talk about the analysis, the interpretation of financial statement. This is where we talk about ratios, computation, and interpretation of the ratios. So just like I explained to us when I was talking about the stakeholders, we have the investors, we have the borrower, we have the employee. So each stakeholders is looking at a financial statement from different angles. Under this section, we are going to calculate different accounting ratios for different segments, for different type of different section of people. For an investor, we'll be looking at the ratios that talk about dividend, that talk about the worth of the company. Okay, for shareholders, sorry, for shareholders, we'll be looking about the ratio that talk about dividend, the ratios that talk about the worth of the company. For investor, we'll be looking at another section of ratio. For lender, we'll be looking at another section of ratio, those ratios that talk about what is the worth of this company. How quickly can they settle their expected obligation, their short-term obligation? Do they have something that they can quickly convert to cash? What is their current asset over their current liability? Does their current asset twice their current liability, or are they at par? So we'll be looking at that under this section. Sorry, I'll be a bit fast this time. The sustainability reporting talk about 10%. It's covered 10% of the syllabus. So there's IFRS S1 and IFRS S2 that talk about some key reporting that must be available, that must tell us what the particular company is doing in terms of sustainability activities, in terms of some kind of social responsibility that they are doing for their locality. We also have ethics, current and technological development in financial reporting. These also talk about the key subtopic that will be discussed, which speaks to the ethical responsibility, some of the key expectation that is being expected from from a corporate organization. So just like we have discussed and apply ethical and professional issues in financial reporting and identify appropriate action. We're also going to discuss accounting standards in issue as may be specified from time to time, identify and explain current and emerging issue in financial reporting, identify and discuss uses and application of cloud accounting, digital assets, the likes of Bitcoin. How should we treat it? What is Bitcoin? Is it IS2? Is it IS16? Is it an asset? Is it an inventory? You know, from different angles, we are going to look at it. For a company that traded Bitcoin in their day-to-day activities, the Bitcoin become their inventory. For companies that have Bitcoin as as part of savings, as part of their asset, as part of something that speaks to their worth, that it's not that they trade it day to day. For that particular company, you will be treating their own Bitcoin as an asset, either IS16 or in form of how did they come about it. So all this will be looking at. So applicable accounting standard. Almost all the accounting standards are applicable. However, for this level now, we have some testable accounting standard, like the likely accounting standard that can be tested in this level. So we have them here. So which is what we are going to be looking at. So I think, okay. So those are the things we'll be looking at for this diet. Those are the things we'll be looking at for this diet. This is after 10 already. This is after 10 already. I don't know if I can quickly take us through this regulatory framework. But actually, it's something you can read on our own. Something you can read on our own. It's just pure English. There is nothing complex or complicated on that. It's just normal English, normal words, and nothing more. Mr. Taufik. Mr. Taufik,
yes.
Can you
yes,
check?
I'm here.
Okay. I say I should explain the framework. Okay, let's look at it together. Let's look at it together.
You can just do it for 15 to 20 minutes so that the class will end by.
So let's look at this together. So basically, the framework talk about, now I've said it before, it talk about the guidelines, the principle, the laws that is being set by the Accounting Standard Board, the Accounting Standard Council, to guide the finance process, to guide the corporate operations. And just the basic reason for all this to be put in place is just to provide some certain level of assurance, some certain level of being feel secured for investors that don't worry. For every company that you want to invest your money in, these are the rules, these are the guidelines that they must follow when they are relating or revealing their financial performance over time. These are the things that must be put in place by them. So let's look at it. Changing the constitution is talking about changing the name. So convergence of accounting standard. So there are two candidates. Convergence of accounting standard refers to the goal of establishing a single set of accounting standard that will be used internationally. This is also described as the international harmonization of accounting standard. You know, they have different sectors. Under this sector, there are different companies. Under this company, we have different individuals. They have different understanding about different topics. So, what can we now do to have an harmonized forms of reporting, to have a unitary forms of reporting, to have a single way that, okay, even if someone that does not understand finance at all is looking at different people reporting, is still going to be able to relate that, okay, this is what they are speaking into, this is what they are talking about in this at this aspect. So the major reason for this is for the finance profession, the corporate world, to have a unitary reporting line, a unitary reporting principle that, okay, if you want to report your asset, you must go in line with what IS16 say, irrespective of maybe this is what you are into, this is what I'm into. If you want to talk about assets, it's that you make use of IS16, you make use of IS20, make use of IFRS 5. So for me, that I want to make the decision, I know that, okay, you are making use of this standard, I can be able to understand that, okay, these are the rules, these are the things you are talking about. So there are two major candidates here. We have the US GAAP, which is General Accepted Accounting Principle, and the International Financial Reporting Standard. Basically, these two principles, they are still much more alike, although they have little differences in between them, just little. But at the end of the day, you realize that what are they trying to talk about? What is their end of the? What are they trying to achieve at the end of the day? You realize that they are trying to achieve the same thing. The US GAAP and the IFRS, they are trying to ensure that investor fund is being secured, is being free from any form of manipulation, any form of embezzlement. Just like we have it in the case of Aaron and Anderson. Aaron and Anderson, that time, the auditor collided with the companies, to create a lot of window dressing, which make a lot of people lose their investment. So after that incident at US that time, the US government come about different measures that they can put in place. All of the key measures that they come about that time is a Samba-Hustling principle. This principle provides a clear guideline that auditor must follow, that the company must follow. That, okay, me as an investor, if I want to invest in this company, these are the things that must be put in place to give me some level of peace of mind, some level of reliability that, okay, so far you have this principle, then you dare not play with my money. So basically, this framework talk about the advantage of this harmonization. We have investor and analysts of financial statement can make better comparison between the financial position, financial performance, financial prospects of entity in different countries. So if you are using a US GAAP to prepare a financial statement, I shall know that you will not recognize the revenue when you have not performed the performance obligation. The same thing if you are using the IFRS standard, you will not do that. And you will not call inventory something else for me. Inventory will be inventory. Asset will be asset. Your liability will be liability. Provision will be provision. You will not go and put your provision figure in your asset figure. No. So also we have the international group harmonization, which simplify the preparation of group accounts. Just like I said, a group account comprises of more than a single entity. It can comprise of up to countless number of entities. But among these entities, there will be a parent company, which we now have different subsidiaries under them. So if the parent company is here in Nigeria, the subsidiaries are in another countries, maybe US, UK, with different accounting principles. But at the end of the day, it will be easy for investors to still compare their operation, to still compare their figures with one another, because they have the principle that guide them. We also have access to international finance should be easier because banks and investors in the international financial market will find it easier. We also have harmonization could also lead to reduction in cost of capital of previous. Okay, he's talking about the previous 2 points. Sorry, please let me take a word. Sorry. So, just like I said before, that there is nothing that with advantage that does not have disadvantage, no matter how small it's going to be. Even though this disadvantage might be irrelevant, but there will still be disadvantage. One of the key disadvantages is national legal requirements may conflict with the requirement of IFRS. Some companies may have strict legal rules about preparing financial statements, as the statements are prepared mainly for tax purposes. So this simply happens majorly between the countries that they adopt GAAPs and the countries that they adopt IFRS. In addition to their own GAAPs or no GAAPs, there are some legal rules and regulations that must be followed, which sometimes conflict what we have under the IFRS standard. But that does not stop the advantage that is going to give us some certain level of assurance, but still, that is also a disadvantage. Also, some countries may believe that their framework is satisfactory or even more superior to IFRS. This has been a problem with the US, although currently it's not much of an issue as in the past. Also, we have cultural difference across the world, which means that one set of accounting standard will not be flexible enough to meet the need of all users. So let's talk about the principle base and rule base. Okay, let's look at it together. So principle or rule base. So detailed financial reporting practice is developed by accounting profession through accounting standards such as standard may be principle based or rule based. So what do we mean by principle based or rule based? So principle based allow us to use judgment, to use our personal judgment. It's more of, provide room for personal reasoning. It provides room for personal reasoning so far there is a clarity on which you now base your reasoning. So, and it deals with a wide variety of situations and transactions. So principle based give room to personal reasoning. You can add your own, you can add what you think to what you are doing. Unlike rule based, that there is a certain rules that, okay, if you want to start writing a letter, you must start with capital letter. If you do not start with capital letter, then you are not following the rule. So another difference between them is it is more difficult to use creative accounting when approach is based on fundamental principles. Yes, when approach is based on fundamental principles, you can't just maneuver. But when you are using rules, the rules is rules already. Even if there is loopholes in these rules, you cannot take advantage of those loopholes to do what you want to do. Let me look at an example that can speak to this. Okay. Do you say that if an asset, if a company decided the company decided to sold out a particular asset using IFRS 5, for example, now. So there are some certain things that you need to do once you decide that, okay, this particular asset, you are not going to use this for administrative purpose or you are not going to use it as an investment property. You want to dispose it of. So part of the thing that you do is you stop depreciation, then you reclassify the asset to a separate line. However, once you meet up with the criteria that you must melt, which include the organization must be doing everything possible to get a buyer and some other criteria. Once you meet up with those criteria, that asset can continue to be under your IFRS 5. There is no specific time to it, although the specific time to it is that, okay, within a year, you must be able to sell that particular asset. Now, in a situation whereby you are unable to sell that asset after a year, we now look at it. Why? If the reason for you not be able to sell that particular asset is not as a result of you not be able to, not doing what you are required to do, then you can still leave that asset under IFRS 5. So these are some kind of loopholes that we can take advantage of. Another difference is bring certainty to accounting process. While the other allow manipulation and transaction can be constructed to achieve an artificial effect. There is rules already. So what I just need to do is to make sure that I tune that particular transaction to meet up with the requirement of that rules, which may not be true in real sense, but I shall know that there is rules and regulation. So the next thing for me is to just tune it up and make sure we have a lot of companies doing this when it comes to tax. But I think the loopholes in tax is now being closed mostly because of this recent tax rules and tax reform that is taking place. So there are a lot of loopholes there before. When we are looking at the likes of basis of accounting rule, when we do the old accounting rule that will be under this taxation. Let me just go there now. So what I'm explaining in this simple sense is that when we have a rule-based standard, all we need to do is just to make sure that we do our things to meet up with the rules requirements. But if it's a principle based, it gives room to a wide range of reasoning. So that it will allow you to think outside the box and elaborate what you want to do. By using rule based, you have been capped already. You can't act outside the rules. So here we have a source of regulation. We have the International Accounting Standard, Financial Reporting Standard, IFRS. We also have the Company Alignment Act. These are the key two sources of regulation. I will look at the conceptual framework notes. If I can see it in my system. So I'm going to follow this and that particular conceptual framework together. Sorry. So I'm going to follow the two together. If I can see it, I follow the two together so that we can go through it and try to understand it during our free period. So do you have any question? Mr. Taufik?
Yes, I'm here. Yes, I'm here, sir.
So I'm asking, can we take question now?
Yes, we can just take few questions. We can take three questions or 4 to 5.
So Mr. Olawale Israel, you can unmute, sir. Mr. Olawale Israel, you can unmute, sir. Mr. Taufik.
Yes, I'm here. He's muted. He can talk. Maybe he's not getting it. Okay. Do you have any other question again so that we can end up the call? Do anybody have any other question? He's already muted. He's already unmuted.
Okay, I think we have 2 people now. While we still wait for Mr. Olawale, Miss or Mrs. Aishat.
Good evening, sir.
Good evening.
Yes, sir. Please, I'm so sorry. Thank you for your time. Thank you for your lecture. Really appreciate. Please, will you send the material to us on WhatsApp?
Yes, yes. I'm going to do that right now.
All right, no
I'm
problem.
just
Thank you
looking.
very
I
much.
want to add the conceptual
Framework.
framework material to it. But I'm
Okay.
going to send this right now. I will send this to the group right now.
Thank you very much, sir.
You're welcome.
Thank you very much, sir.
Mrs. Afsat, you can meet.
Sir, please, when the class is about to start, please be posting the link. Personally, I was looking for the link to be posted in the group for like 30 minutes since like 8:30, and just need to see the YouTube link sent to the group. So please, if you can be sending it, I would be more than grateful. Thank you
Okay,
so much for your time.
are you talking about the link? We should post it
Yes,
before the class, right?
yes, please. The link to this meeting link, not the
Okay,
YouTube one.
okay. So we are very sorry that today we actually sent the link lately. We are very sorry about that. Subsequently, we'll try as much as sending it maybe 20 or 30 minutes before the class.
Thank
We
you
are
so
very
much.
sorry about that.
Thank you.
Good evening.
Good evening, Mr. Lawrence.
Yes, sir. Sorry for the delay. Please, when we're talking about those IAS, you talk
Yeah.
about capitalizing an asset.
Okay.
Please, can you explain what you meant by capitalizing assets? Thank you.
So I talk about let me check this where I talk about it. I think I talk about it. Okay, so capitalizing assets simply means what are the values that we are going to add together that meet up the criteria. Let me take an example of IS-23 borrowing costs. So it's talk about taking a loan to finance a particular asset. But for every loan you take, there is an interest element to it. Now, in line with IS-23, we are supposed to add the value of that interest value to the original amount that we borrow if we meet up some certain criteria. So capitalization talk about the total value that meets up some certain criteria, which we now in return form the absolute value of our assets. Did you get what I'm saying?
So can we say the capitalization is also can also be carrying amount?
Yes, the capitalized amount will be what we are going to carry.
Okay.
However, carry amount have some set of elements in it. You get, so carry amount as at when, but in real sense, before we can call something carry amount, it will definitely be the capitalized amount before you can call it carry amount.
Okay. Thank you, sir.
So we can, Mr. Alawale, are you there?
Yes, I'm here.
Okay, so you can also say a capitalized value is the value which an asset is recorded in the statement of financial position. So which is going to comprise of the cost and some other cost being incurred. What does that mean by the cost and some other cost? Now, I purchase an asset 50,000. Let us assume I purchase a generator now for 50,000. So at the place that I purchase the generator, I'm still going to spend another money to take that generator to office, to where we want to use it. Are you with me?
Yes, I'm here.
Aside from that transportation cost, I'm still going to incur some other costs Maybe it's all these mechanical generator that require you calling some professionals to come and install it, to come and do the wiring and the rest. You know, all this money I'm incurring now is different from the actual purchase price of that particular generator. Now, capitalization will now come to place whereby I will now add 50,000, which is the actual cost price, plus the installation fee, plus the transportation fee. So the addition of all this value is what I mean by capitalization value. The actual cost is 50,000. While there are some other costs that are directly attributable to this particular asset, which means that if I did not purchase that asset, there is no way I'm going to incur that money that I'm going to pay to the professionals, electrician that will come and install it. If I not buy the generator, I won't have any reason to transport anything. Can you get me? Are you getting it now?
Yes, sir.
So,
Yes, I can get you, sir.
When I'm talking about capitalization, these are the summing up of the total cost incurred on a particular asset to form the value of that asset. Did you get?
Yes, sir. Thank you, sir. I can get you now, sir.
Well, yeah. So we can as well narrow it down to some what are the examples of capitalization costs. So capitalization cost can include the purchase price, it can include delivery cost, it can include installation cost, it can even include legal fee, if any. Let's assume when I buy the mechanical generator, there is a must or there is a necessity for me to get some documentation before I can move it from that place. And before I can get that documentation, I need to get a lawyer. Just for an example. Now, the money I'm going to pay that lawyer, let's assume I buy my generator 50,000 and I pay the lawyer 10,000. When I want to record the value that 10,000 is directly attributable to the generator. So I'm going to capitalize it. So capitalization just deal with the summing up of all costs attributable to a particular asset to derive at the value of that particular asset. Please, did you understand? Mr. Wale? Do we still have any other question? Mr. Tafik?
Mr. Sulaiman, I think he is fine. Thank you very much, sir. Thank you for
fine. It's understandable.
Yeah, thank you. Thank you, sir. So I think we can now summarize, we can now conclude the class now. Good evening, everybody. We can give a very big round of applause to our lecturer. So you can appreciate him, you can do better. So Mr. Azan, that's all for today. He's going to address you in the class.
Thank you, sir.
You can send message to him, to his DM. He's going to expatiate more on your particular question. So we need to end this class now. So good night, everybody. Our class continues. Is it not tomorrow? Or is it on weekend? We send the timetable today, please. Yes. So
I will send the material to the group now. I will send it to the group. And also for the conceptual framework.
It's on Wednesday. You have a file on Wednesday.
Okay, no problem, sir. On Wednesday, we are going to continue our class. So thank you, everybody. Mr. Sulaiman is still on the call.
Thank you so much.
You are welcome. You are welcome. You are welcome.
Thank you, sir.
You are welcome. You are welcome.
Thank you, sir. God bless you.
Thank you very much, sir. God bless you.
Add to your knowledge.
Thank you, sir. Good night, sir.
Good night, everyone.
Bye.
Okay, so good night,